Hello, this is John Kicklighter, Global Head of Content for StoneX, here to discuss market conditions into next week and the top event risks that global investors will likely focus on. Now, in overall condition consideration, we're looking at a market that is going to have a significant shift. From last week, we had some relatively quiet conditions. Headlines were very much the forefront, but not a lot of traction on markets. And that's also because there wasn't a whole lot of event risk. In fact, the event risk that we have in the next week is going to be so dense that it could, in fact, lead to a stopping of markets in reaction to major events. That's because the reactionary effect will be somewhat stunted because expectations for the subsequent or the next day's events are going to be so high that it can actually render us inert as the markets try to price in far too much, as these are also very big themes. Now, in terms of the shift towards risk and risk appetite or risk aversion, I think with the S&P 500 and the Nasdaq 100 and other major benchmarks for risk pushing to new record highs, we have a distortion. We have a risk on orientation, but it's more based in complacency, a crawl higher where we haven't seen a whole lot of momentum. It is a disproportionate opportunity in terms of a slow climb higher or a sharp decline if things start to turn poorly, and dependent upon what the event risk is. That is kind of the contrast that we have. It's the stairs up and elevator down kind of effect. And we need to be mindful of that. Doesn't necessarily mean that we have to turn to a market decline, but the risk is certainly going to be disproportionate. Now, we should also keep an eye on headlines. Headlines are probably going to be less influential. And when I mean headlines, it's outside of the scheduled event risk. However, we never know when something is going to come in, especially when it's related to tariffs and trade wars. Now, in terms of the top themes that we need to sort or draw out of this massive amount of interest that we're looking at, I do think that the tariffs are going to be top of mind. And this is going to be one of the problems in terms of establishing a clear bead on market sentiment through the week, is because at the end of the week, on Friday, August the 1st, the expectation is that the US will apply the delayed tariffs, the reciprocal tariffs, on all those countries that have not rendered a clear trade deal with the United States. Now, there's multiple ways this can go. It may actually be another delay. I guess we can have the outlier opportunity or option that there could possibly be deals for everybody, or more likely it's going to be the application of tariffs on some, and there will be deals with the few that have actually struck them. Maybe some delay and deferment for some where the negotiations are being seen as fruitful by the administration. But all this anticipation and the ways that it can play out, and especially given the amount of influence that it holds over fundamental consideration, is really going to weigh on the market, and that's going to make that event risk that comes Monday through Thursday much more questionable in terms of how much impact it can have. Now, aside from that particular theme, I will be watching the consideration of what the FOMC does in the context of monetary policy. Obviously, this past week has seen a lot related to that. But the Fed is really leading monetary policy, not just because it has the highest interest rate amongst its major counterparts, but because the influence that it has from external pressure, mainly the White House, is really putting into question monetary policy as a long-term consideration. And you might even see, if the markets do not respond with high volatility to that event risk that we're going to have day to day, there's going to be this conversation that arises that perhaps volatility is permanently lower. This happens every single time we have a cycle low in volatility, and it's not to be expected to be simply gone for now. If we are managing to stay stable and low vol, expect that kind of conversation to arise, but it almost never is true. Now, in terms of the top scheduled event risks through the week, there is a lot. So we have to pick and choose what's going to carry the greatest influence. And I always like to look at it from a global macro perspective. What can move the broadest set of markets and the largest regions around the world, being global in influence? And there are certainly a lot of event risks that can achieve this. But going through Monday through Friday, Monday, I think we have the lull. We have some trade considerations, namely Mexico and Hong Kong. And with the context of trade wars and tariffs, We do want to see how that plays out, but it's going to all be in context of what's going to come with definitive decisions and event risk later on in the week. So the market moving impact is probably going to be substantially lower than it could be otherwise if there wasn't a overloaded docket ahead of us. Tuesday, we're going to get into some broader context. We have U.S. trade, which is, I think, much more tangible in terms of the tariff consideration. We're going to have U.S. consumer confidence. We want to see how all these uncertainties are playing out in the world's largest consumption engine, the U.S. consumer. And I think one that's not going to get a lot of market moving potential unless it really does put the U.S. in a bad light and draw the ire of the U.S. president is going to be the IMF's World Economic Outlook update. It is one of the few times we can see a consistent global applied assessment of GDP and potential, and it's certainly going to give us a big insight into how these tariffs and uncertainties are playing out in the context of a singular entity's growth forecasts. Wednesday, we start getting into the real meat of the event risk. We're going to have GDP figures from the United States, the Eurozone, Mexico. But really, what we're going to be looking at is two somewhat dueling themes. One is going to be the FOMC rate decision. This is not one of the quarterly events, so we don't have the updated forecasts. However, we're going to see most likely a no change. And then we're going to really read into the monetary policy statement as well as Jerome Powell's press conference, because he has been certainly pressured by U.S. President Trump. This past week, they were doing a walkthrough of the Federal Reserve's renovations, and the pressure was put right to his face. So we want to see how the reply is officially from this monetary policy setting entity. And also, after the close on the US, you're going to have earnings, Microsoft and Meta. So we're getting into the real Mag 7 big hitters as of Wednesday afternoon. Thursday, Chinese PMI, the BOJ rate decision, which is expected to end with a 25 base point rate hike, which is a big contrast to most of the other central banks around the world. There's a lot of pressure there and a lot of political uncertainty. So Japan being one of the largest economies, we should watch this very important event risk. And then earnings after the close on the US session Thursday, we have Apple, one of the largest market cap stocks in the world, and certainly a bellwether for corporate earnings and generally shares overall. On Friday, we have the non-farm payrolls, but then we're also going to have that tariff deadline. So we have to watch the headlines because there's not necessarily all the details and the exact execution of these tariffs all readily laid out for us. So we have to keep those eyes on the headlines. All right. That wraps up for the week ahead. Don't forget to like and subscribe for more financial market insights.